A 114-day long RSI trend line is present on the daily chart. A break over this level will shift the momentum in favor of the bulls and result in Bitcoin breaking back above 30,000. In today's video, we're going to be discussing this along with so much more. Let's get into it. Okay guys, welcome back to the channel. Thank you so much for tuning in. I hope you're all having a magnificent day today. We're here to talk about Bitcoin on the daily chart, as we are going to be talking about the potential trigger for the move above 30,000 on the monthly. We're looking at the RSI, particularly focusing on the momentum and this 114-day long RSI resistance that could be the spark that ignites the move that remains Bitcoin's price over 30,000. Along with that, we'll talk about the broader markets, market data, economic data, short-term price action, run a complete technical and structural analysis as always. Before we get started, smash the like button, hit the comment button, and of course guys, subscribe to the channel. We do daily videos for Bitcoin focusing on the charts, the facts, the data, the structures, the technical information. No hype, no BS, no emotion, pure raw TA. Let's go ahead guys and get stuck into it. Before we do, if you're interested in more of this kind of content, join us on Telegram. The second link down below, access to updates, charts, analysis, information, educational posts, news events, and so much more in this channel. Second link below. If you're interested in our VIP group, we've got access to daily trading signals, entries, targets, stop losses, exclusive analysis, and so much more, such as these trades here, such as these trades here, such as all this. Go ahead and contact me guys. The pinned comment, you'll not only get access to that main channel, you'll also get access to our exclusive group chat, and of course more information including our entire trading track record can be found right here. Get around it. Let's get into the video, starting off the market data. Currently for the month, Bitcoin is sitting up 0.39%. Not a whole lot of price action so far this month. We've seen a lot of consolidation followed by quick volatile moves upwards, followed by compression, followed by quick volatile moves downwards. It's been a very spiky month, but overall not too much happening on the month ROI. Looking at the 24-hour liquidations and liquidity, we are seeing around $17 million in liquidations, down around 28% in the last 24-hour period, and the 24-hour volume is sitting at 65 billion, down around 24% in the last 24 hours. Looking at those liquidations, we can see a decent spread between shorts and longs. We saw a lot of longs liquidated yesterday on that strong move toward the downside, and we have seen quite a fair bit of shorts liquidated today. In this morning, we saw quite a strong rally back upwards, clearing out those longs, clearing out those shorts. Obviously, volatility index pretty much unchanged, 2.16 on the 30, and on the 60-day, 2.92. Let's go ahead and talk about the broader markets. The DXY is currently still in that major support level, guys, holding support relatively well. Again, if we do lose this level, we're going to see a strong correction for the DXY, and we are going to see the broader markets, S&P 500, Dow Jones, its indices, and of course Bitcoin most likely retrace. Of course, Bitcoin is strongly correlated towards the traditional markets by about 70%, and the traditional markets are inversely correlated to the US dollar, and thus Bitcoin is as well. So if we do see the DXY drop, thus the US dollar lose strength, we generally see these asset classes rise in value, so we can expect Bitcoin to do the same. Alternatively, if we do find support here, which is very probable, this is a 1-year long support, and we break this downtrending resistance, we are going to see the markets rally. We're going to see Bitcoin pump upwards, break over 30,000. We're going to see S&P 500 and Dow Jones break their neckline resistances. We are going to see a lot of money inflow into the markets as the US dollar loses strength. Let's go and talk about that. Dow Jones, S&P 500, local resistances. These are 1-year long resistance right over here. Local support. We are in a rising channel formation, something to be of some concern about. Of course, if we do break downwards, guys, we will see a continuation towards this trend line. However, the Dow Jones breaks downwards, we're going to see a push upwards, and we do need to break over this neckline resistance to send us higher. If we break that neckline resistance, we head into 4,300. Dow Jones over here, if we do see the same thing occur over here, dotted trend line, a major support. If we break that resistance, we are heading upwards. Let's go ahead and get into Bitcoin, guys. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you could do so with the link in the description. Thanks for listening. Okay team, let's go ahead and talk about Bitcoin. Bitcoin has been in a uptrend for around 120 days thus far, and this has been started ever since we broke out of that descending wedge formation we had during August to January 2022 to 2023. This, of course, was the bullish reversal structure that resulted in a strong rally to the 25.2k resistance and $30,000 resistance. The $30,000 resistance being the yearly low of the prior cycle. This is an over 800 day long support level, a significant support level on the chart that will trigger the price action flipping from a daily and weekly uptrend into a macro time frame uptrend, an important level. Now here is the thing, and this is kind of the point of today's video. If we look at the momentum over the last 100 or so days, we can see that overall momentum has been falling. However, the price action has been rising. This is overall a sign of weakness. This is called a bearish divergence. This is when we have a discrepancy between price action and momentum. Now, really quickly, why is this important? Because momentum is derived of a few characteristics. We've got velocity, volume, speed, and liquidity. All of these things comprise together and basically define what the momentum is. So when momentum is falling, we know that velocity, volume, speed, and liquidity are all falling as well. Now, when we look at the price action strength, or we define the strength of price action, what characteristics do we look at? Well, we look at all of these four characteristics. That makes up the strength of our price action. We also add in volume when we do so. So if we see momentum is falling, it suggests that the characteristics of which we use to define strength of price action is falling, and thus the strength of price action has been weakening. We can see weakness in the strength while in an uptrend, and that is displayed as exactly what we're seeing here. When we see a bearish divergence, it is expressing weakness while in an uptrend, and thus a discrepancy. But here is the really cool thing. The bearish divergence does not necessarily need to mean the be all and end all of the chart. It doesn't mean we're going to crash down. What it means is we have a discrepancy in volume, we have a discrepancy in momentum, liquidity, all these metrics of price action that increase the probability of a rejection from this range, but doesn't confirm it. What can confirm something is if we get a shift. So here's the cool thing we want to discuss today. What is the probability of a break upwards of 30,000, and how can we validate that the break over 30,000 is going to be a verified break, and of course a break that will sustain? Because we have seen a break over 30,000 before. Of course, that was deviation, that was a rejection that trapped a lot of people into the market. A lot of people got wrecked by getting in early, and of course they did get liquidated. However, we've sold at this point here. We bought a 16.5k. What we'll be looking for is a break in this bearish divergence. We're looking for a shift in the bearish divergence, meaning we would like to see the price break 30,000 at the same time or after the RSI shifts over this downtrending resistance. If the RSI shifts over downtrending resistance, those metrics we discussed here before, volume, liquidity, speed, velocity, all of these metrics turn bullish again. If those metrics turn bullish, that shifts the probabilities in the favor of a higher time frame continuation upwards. Incredibly important stuff there, guys. Let's talk about the higher time frame trend, and then we'll get into our TA. So currently we are in an uptrend. Currently the daily uptrend is validated. Now we do have verification of this because we are above not only the 50 EMA, which is this daily red line, but of course we are bouncing above the Gaussian channel, which represents the overall trend or the strength of this current trend. Two really, really important factors. If we take a look at the downtrend, when will the downtrend start? We need to have technical and structural confirmation for this uptrend to be lost. So currently, yes, we are in a uptrend. The uptrend is weakening. We do have deviation. We have lower highs in this uptrend. We'll talk about the short term in a second when we get up to it to discuss it, but it is weakening. But when does this weakness actually develop into a downtrend? When does this weakness actually develop into this uptrend is broken and we are going to continue down? Well, we need to see two things. We need to see a structural loss and we need to see a technical loss. From a structural perspective, the short-term trigger for a continuation downwards to 25.2K, which is going to be a major support level preventing us entering a downtrend, meaning if we lose this level here, we technically enter a downtrend, meaning this uptrend is now invalidated. The technical trigger for that is going to be a loss of 27,000/26,800. However, if we lose a 50 EMA and thus that level at the same time, we're going to have structural and technical confirmation of that. Thus, the probabilities of a continuation downwards are even greater. But it's very important to note, we are technically in an uptrend until we lose 25.2 to 24.4. So let's talk about 30,000 and why it's so significant in our higher targets. So if we do break upwards and we shift the RSI positive on the daily chart, we can expect a move upwards to around 32,000. 32,000 is going to be that next higher time frame resistance according to the higher time frame chart. We can see according to the VRPV, we have a degree of resistance within that range. I'm going to go ahead and chuck it on the 200 row size so you can see. If we do zoom out over here, you can see we have a small degree of resistance here, as we can say this is resistance because when we have a significant drop off of this volume range, we know that this area is going to be acting as a buffer between the shift from higher resistance to lower resistance, and thus will act as a liquidity zone or a resistance level. If you take a look above $30,000, you can see the VRPV essentially evaporates, meaning this area is an incredibly high volatility range. If we have a high volatility range, it means we need low volume, and thus this means this area is of low resistance, meaning if we are able to break above 32,000, we are going to see a strong and rapid move to 38 to 40,000, guys. So what is going to trigger all of this? Well, the trigger for a move to 30,000 is going to be that daily RSI break and close. We need to see that break and close at 30,000 and the break and close on the RSI to trigger that move higher. Let's go ahead and talk about 30,000. Let's go ahead and talk about the significance of it and even higher targets. Going to the 4-year cycle, we can see that 30,000 has provided a strong base of resistance for the last 800 days. Okay, it was support during the bull run and has been resistance ever since. If we look at prior cycles, we can see the prior yearly lows of those bull runs, represented by these thick horizontal red lines, have acted as major trigger points on the monthly chart, which when broken, resulting in a strong push to these dotted trend lines. These dotted trend lines are, of course, the first high of the dead cat bounce after the bull run top. You can see the one over here is 48,000. Let's quickly divert back to this chart and talk about 48,000, and then we'll get back into our chart. So we take a look at this chart here, 48,000. If we look at the VRPV once more, we can see 48,000 right over here, represented by a local top within a rising channel formation, as well as a huge jump in the VRPV. The moment we break over that point, the VRPV starts to drop off, the liquidity starts to increase, the volume and volatility start to increase, the resistance starts to fade. Looking back at the 4-year cycle, we can see every single time we break over that dotted trend line, we start to see the trend angle increase, meaning the trend angle from the bottom to that red line is less steep than the trend angle from the dotted red line to a bull run top. You can see it in both instances here compared to here, meaning a break over the dotted trend line will result in a surge of volatility, liquidity, and volume in the market that will trigger Bitcoin to go to a new all-time high. All of this to happen, we need to see that $30,000 level break. And for 30,000 to break, we need to see that daily RSI break. Otherwise, it is going to be deviation. It's going to be rejection. Until that happens, we are not in a macro uptrend. We do still have a possibility. Why am I drawing? We do still have a possibility to come down. And if we lose 24.4, we'll talk about it in the short term. We'll talk about how we can come down here in just a moment. If we lose 24.4, 25.2, we have that risk of coming back down here as we enter this horizontal range again. This was deviation. This as well, we turned into deviation. Very scary stuff if it happens. Let's get into the short term, guys, because we've talked a lot about the macro. So that is what we're looking for. Short term price action. We can see we are in a rising channel formation on the 15-minute chart. We took some fantastic shorts around here yesterday, all the way down here. Some really big profits. What we can see is, of course, that rising channel formation is still very much intact. And a rising channel formation is a bearish structure. It represents an uptrend that is losing strength, losing volume, losing liquidity. It is a weakening trend, okay? There's a compression, there's an upward compression that eventually breaks, more likely into a downtrend. So keep your eyes on that. If we do lose this downtrending resistance or support, we are going to see a move toward this level. Here is the interesting thing. That $27,000 level, guys, that we talked about just before, that is going to be our range low support as per our short-term structure. If we lose 27,000, as we discussed in this chart here, the confirmation of a move down to 25.2 is going to be the technical confirmation of a loss of the 50 EMA, a loss of the Gaussian channel midline, and a loss of the $27,000 range as per this chart here. If you see a $27,000 break, we enter that low resistance range. Where is our next support? 25.2 to 24.4. Right over here, drag that across. We can see that support there. It is not rocket science. Keep your eyes on the chart, guys. If we see a breakdown from the current rising channel structure, we'll be entering this lower support, retesting these lows. We are going to lose that level and we are going to move down here. So keep your eyes on that. How can we invalidate this bearish structure currently forming? Well, if we take a look at our higher time frame zones, specifically this red level here, to invalidate this bearish structure that's been developing, to get the bullish strength back, we need to see a break over 29.4, okay? But more specifically, the bulls really don't have any more strength until 29.6 breaks. If 29.6 breaks, we are going to see a continuation into 30. And of course, at $30,000 breaks, we are going to see a continuation upwards to 31, which could trigger that RSI break and a higher time frame continuation. The bulls are not looking amazing right now. It does look like the bears still do have a little bit of control. Of course, on the daily chart, we have been printing these lower highs. We are starting to dip into our Gaussian channel. We are starting to dip into our 50 EMA. We do have the RSI moving down. We do have a little bit more weakness showing. But again, while that trend remains upwards, while we start to see this momentum flood back into the market, the prices can still go up, the market can recover. And of course, if the DXY drops, we are going to see all of this happen a lot faster, and it is going to be validated and confirmed. All I am saying, guys, watch these trend lines, watch these zones. We are bearish below here. Bearish below here, we are bullish above here. Until then, neutral. Trading a short-term trend, trading the swings, don't get in your head about it, just trade as per the charts. Let's go ahead, guys, and do a really quick small time frame analysis on the 5-minute chart, and then we'll come and do a higher time frame technical. So as you can see, we have actually come upwards and retested the top line of this resistance zone one more. Not only have we retested the top line of that resistance, we have retested the 29.2 to 24.4 level. If we lose 29.2 on the short term, we're going to see a move back to retest this low area, this little gap right over here between 29.2 and 28.95. If we lose 29.2, expect a short term to push downwards. If that occurs, we are at a larger threat of coming down to retest the uptrend of this rising channel, and thus we are going to see a potential breakdown and continuation. If the bulls want to remain control here, we cannot see that bearish move complete. We have to see that price push upwards. We need to see 29,400 clear, and we need to see a push up to 29,600. Until then, on the short term, I have a slightly bearish bias. I'm expecting the price to move downwards until proven otherwise, guys. Okay, I'm going to leave the video there. A little bit of a shorter one today. I am in a bit of a rush. I don't have a lot of time, but I hope you enjoyed the video. Contact us on Crypto Academy. You can join our email list over here to get access to our 10-unit course. Send us that email. We'll send you all the information. We teach you how to trade. We teach you market structures, market candlestick patterns. We teach you a variety of different technical indicators and, of course, the essentials to looking for trades and finding trades yourself, including market psychology. We give you a whole bunch of worksheets and so much more, guys. Go ahead and contact us. We'll send you all the information. Thanks for watching, guys, and I'll catch you in tomorrow's video. Cheers.